All right, what's up, boys? It's pre-market analysis really quickly. I wanted to make this video. It's gonna be inside the mind of a profitable day trader. Okay, I've only been profitable for 3 months, but I've taken around over $50,000 in payouts. And yeah, no, I'm definitely one of the goats. I've also traded on a live options account and made money there, etc., etc. I'm not an Instagram guru that doesn't know what he's talking about. I will only talk about things I understand, and I will get informed on things I don't. So pre-market analysis. We're gonna be doing this thing where it's like inside my mind, but I'm gonna have it on video and it's going to be me talking through about live trading and I'm going to explain my thought process. So maybe it could help you understand what's going through my mind. Okay. Because, like, if you realize, if you understand what you're thinking in your mind, or understand what someone who's good or better than you, at least I might be better than you. I might not be the greatest trader alive, but I might be better than you. If you realize what someone who's good is thinking, maybe it can pretty much transform the way you think as well. Okay. So, yes, I'm wearing only underwear and a shirt. I'm not wearing any pants. Cry about it. Let's lock in. Okay, so today's the day of CPI. So you can see that the CPI candle creates a data high and a data low. Okay, the data highs and data lows are one of the greatest draws on liquidity. Why? Because it is a time in the market that is very imbalanced. Okay, it kind of acts like a fair value gap or like tapping back into equilibrium. And the reason that is because at this point, not many people, I'll show you on the 15-second chart, not many people are able to get filled at either side of the curve. So let's say there was resting limit orders up here, and there's resting limit orders right here. They all get filled, right? They all get filled, or most of them get filled, and then some of them don't, okay? So there's people who are in profit here, and there are people who are in profit here because we're in between the range. Eventually, we should end up taking both sides of the range to rebalance the auction, okay? That's kind of like an order flow concept, and then mixed with like an ICT concept as the data highs and stuff. So I don't know if I explained that 100% correctly, but you can kind of understand how if one side like basically someone who's in profit too quickly, it needs to get rebalanced or it needs to be retapped into. The only problem I have here is that this bottom wick, which would be the target now because we just took out the data high, this bottom wick is going to be protected. Why is it going to be protected, right? First off, we are trending upwards. Okay, we're trending upwards, as you can see. Let me zoom out to the weekly. The weekly chart, we came down, we made our bottom wick, right? So now we're assuming, okay, using power of 3, on the weekly chart is that we're going to end the week somewhere up here, at least take out the weekly high, maybe up here, even higher, depending on how parabolic we go towards the end of the week. Right? We're assuming that this bottom weekly candle is going to be the low for the week. Okay, so by Friday, we shouldn't go lower than that, right? Now let's go back onto the daily. On the daily, we can assume that this is a protected low because this is the bottom, the weekly bottom. And this is the fair value gap, right? We tapped into the midpoint of the fair value gap. We went higher, pushed higher, blah, blah, blah. Then we had this inversion, which doesn't really matter because we were targeting a protected low. Anyways, basically what we're saying is we're gonna go higher. Okay. And what does this look like? This looks like we came down and now it's time to come back up. The only problem is this right here, this little 1 hour fair value gap is also the bottom wick of a 4-hour candle. Okay. So I'm assuming, okay, this is my assumptions, that the 4-hour candle that closes at 10 a.m. Okay. By 10 a.m., that is when this becomes open to be taken. Anything before that, it's protected. Okay. Same thing with here. On the 1 hour chart, you can see that we have this huge gap. We tapped into the midpoint off the news. We got the buy, the buys, right? And now this, in my opinion, becomes this bottom data low is, even though the data low is a strong draw on liquidity, in my opinion, it now becomes protected until 10 a.m. Okay, I don't make the rules. Actually, that is a rule I made. I don't think if anybody ever talks about this because they do just assume that the data low is not protected. Also, you can see we're going parabolic. We're not going to fight the trend here to just try to catch it back down to the data low. If anything, it'll dump off and then we'll catch longs to the data to the weekly highs up here. So these are the weekly highs, right? These are the weekly targets by now. By Friday, we should tap this, right? And by today, we should tap this, which we look like we're going to hit it before market even opens. And who knows, maybe we open and we go parabolic to the upside as well. Anyways, that's just what I'm thinking. So I don't really do much of a pre-market analysis. I like to react a lot more than I like to analyze and give scenarios. I think giving scenarios is very limiting because it's like you want to be 100% correct about what you see, but you can adapt on the fly. So if we end up projecting off of this high right here and creating some type of reversal towards the data low, I don't care. Like, I'll take it. It doesn't matter. Also, a good sign that I like to do that I know, like, it doesn't really make sense, but I like to look at tech stocks. What are tech stocks doing on the day? As you can see, tech stocks are gapping upwards. So I don't really want to fade that. Like, I don't want to fade, most of these tech stocks gapping upwards because at the end of the day, the NASDAQ 100, which is the charts we trade are just made up of 100 of the tech stocks that we trade, right? So if 100 of the tech stocks are gapping up, is this, yeah, even Nvidia is gapping up, right? All of these stocks are gapping up. We don't want to fade the idea of, you know, us pumping, right? Because if we're fading the move, we're just gonna get caught in a lower time frame or lower time frame reversal, but a higher time frame continuation, which is definitely not what you want to be caught in. Or we're gonna be trying to catch a higher time frame reversal, which is like not what you want to be able to catch. These are the accounts I'm trading on. I've taken $30,000 in payouts this month from them. I have 5,497 drawn on this one and 5,250. I just need to make 750 on these 4 accounts and then $500 on these accounts to take another $3,000 payout per account, which is 15K. But yeah, I just trade them normally and I get the buffers higher. I need 4 more winning days. So you're probably wondering, oh, how does he need 4 more winning days? But he has such a high buffer. That's because every time I trade, I don't go for winning days, like the $150 winning days. I just keep trading my normal system. And I lower the risk, of course. Instead of risking like 1,000 or whatever, I'll be risking like 500 and I'll be taking those profits on the way up. So yeah, like I don't mind risking. Like risking is not a problem for me because I have such a big drawdown. I would have to lose so many trades in a row now to blow my account, and if I do, it's my fault, right? So I don't mind that. Also, another thing I like to do is I like to have my phone on the side right here with options open so that if I want to take a live account trade, right, because I have a live options account, I could take it, right? So now I'm on these evals, and all I need is really $150 winning days. It doesn't really matter anything else, right? But if I see something that I want to take that is A plus 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 plus, instead of spamming more accounts, I just take it on live options and I try to risk around $300 to $500, and whatever the options take profit is, I take profit and I make money. Like yesterday, I was up $400 in my options positions, and then ended up getting stopped after break even. But it doesn't matter because I made money on the futures accounts. But you can see how, like, if I took profit on both, I'm up 400 on this and I'm up whatever on this. It's like, go to the shit. Okay, let's lock in, boys. Market opens right over here. It says market open. We took out the high already. We're probably just gonna rip through the highs and go fucking 85 points to the upside and call it a day. Excuse me. It's either we rip through the highs or we completely reject and come all the way down here. I feel like today's might be probably like a lower probable day. Like it doesn't feel like a day that would be because this data low, you know? If we somehow slice through and just diddy wig downwards to this data low, I'd actually be so surprised. Like I feel like data lows are good draws, but it's like it must be like crazy good if it's gonna do that. Okay, so we're coming down here. It's possible, bro. It's possible with this speed and momentum I'm looking at right now. It's definitely possible. A lot of speed, a lot of momentum. A lot of speed, a lot of momentum. Let me tell you. Okay, so this is actually not bad. We have LRL built above. We have this huge thing that we cleared. Some LRL here. Just gotta be careful with ES because ES is already sliming it up. There literally is no draws above anymore except for this one up here. Yeah, I mean, not terrible. Okay, so we're starting to take shit out. Thinking about it so much. Okay, so we just tapped into 15. Is this going to be the rejection point? If we don't reject this, we are slicing through, like slicing through. Yeah, it seems like we're slicing through. Okay. Wait, rejection. I don't think ES would come all the way down here just to go back up, you know? Does that make sense? But who knows? Think some rejection here. This might just be one of them continuation shorts, right? Because if I'm longing here, I'm longing nothing, so. Like, okay, so this is 9:30 open, right? I assume we're going to go higher throughout the day, maybe today, tomorrow, to go to these highs up here. But we're slicing through, we're creating no structure. So if we try to come up here and we fail somewhere up here, we're just going to dump. That's just like what I've noticed. Right, this low could be protected. We don't know yet. It is a data low though, so it's like, is it protected? Is it not? I don't know. We have to see because it react. Think about it too much. So right here, like you wait 5 minutes, then you wait for the next 5 minutes candle to open. If the next 5 minute candle opens, comes up first, it's gonna be continuation shorts. And then I'll literally just play for profits on the winning day. Okay. All right, let's see it. Let's see it. Let's see it. Mind you, I'm looking on the second monitor. I'm looking at 30-second. I'm looking at the 15-second. You can't see it obviously, but S&P 500 hasn't continued lower. Think about me too much and lost me about it. All right, 28 seconds. A lot of rejection here. Lots of rejection. Close down here, that'll be pretty bearish for at least a 5-minute chart. Think about me too. All right, so we're closing pretty far down, and I think we're just gonna dump. But this is an order block now. So technically, like this should be a protected swing, or not. Like kind of. I think I short off this with a stop above this isn't a bad idea. Yeah. Be treated you bad and wrong, my dear. Be treated you bad, wrong, my dear. So like longing anywhere like right now is kind of like not the best because like I said, there's just no structure to the upside. The only structure is to the downside. So, and we're kind of honestly we're kind of in two high resistant draws right here. It's like it's a news candle that is in high resistant area, and it is a a high that has nothing to like no structure towards it. So like odds are we go up here. I'm assuming this is the 931 gap. This is first presented. We tap into this gap and maybe continue lower for a little bit. Definitely possible. I want to take shorts right here, bro. I think this is like the lowest, the one of the what's it called? Yeah, I want to take shorts with like a small stop because it's possible that we just created the bottom wick and we're gonna send higher. That's possible, right? But it's also possible that we fail this and we go lower. So there's two conditions. And I'm fine with taking a loss here, especially with the idea I have. It's just now I'm looking at now like right now before I get my entry, I always look at these smaller seconds charts to see like what's the reactions looking like. Like how are we moving, how are we pumping, how are we like, you know? So So usually like in 35 seconds, you can kind of tell like when this 1 minute candle closes, you can kind of tell what's happening. Like the best thing to do here was to like pre-fire the entry. If it comes up again, I'm gonna enter. Ooh, it's 30-point stop, bro. This is volatile last day, bro. No, don't go down first, bro. Go up first, yeah. Okay, so I entered there. I'm gonna go tight stop because I just don't think we're gonna come back and revisit this 1 minute wick. And then I'm gonna go stop loss break even pretty much right now. And you see how I pretty much get the move and I'm break even in half a second. In half a second, I'm break even. We inverse the 15-second. If we come up and tap my break even point, I personally don't mind getting out of the trade. I'm up 400 here. Now I could literally see it go all the way down to these data lows. Look at the ES chart. And literally, I'm literally just waiting for it to come down and touch the 5-minute open. Okay, that's literally what I'm looking for here, is the 5-minute open. If we reject this and we break even me, I don't give a shit. I move on with my trades and I call it a day. I just assume that that's going to be the 1 minute high of that candle. I'm always thinking in power of 3 on the higher time frame, on the lower time frame, and all of that stuff. So now we just wait. I only need like $500 or so dollars. I'm just going to let it run though. Wait, how much do I need on this account? Yeah, I just need, what was it? I think it was $750. I'm gonna let it run to full TP, and there you go. Literally textbook. Okay, this is the first presented. I didn't draw it out correctly. This is the first presented fair value gap in the leg. Okay, if it is created, I follow this one guy on Instagram. Shout out him. If it is created in the manipulation leg, we use it as an inversion. If it's created in a distribution leg, we use it as the fair value gap. So this is created obviously in the distribution phase, right? This was the accumulation, the manipulation, the distribution. So tap into the first presented. Like I told you, there's no structure to the upside. We are not, okay? We are not going to end up slicing through this gap. There's just no way. So I could have entered here, like literally could have top ticked it with stops above here, right? But I went for something a little bit more discretionary, a little bit more top ticky, if you would say. Basically, we tap into the gap. I see some rejection. This kind of closes. This kind of opens up. Now I'm using power of 3 on a lower time frame. It comes up here, and I'm assuming that we're going to get some type of reaction. I enter. My stops would actually just be above this swing high, right? So it's 23-point stop. But the second we get some rejection, I'm already break even. I'm already break even. Why? Because if it comes back down to the opening of this candle, and it pushes down a little bit, and then comes back up to the high of this wick, it's going to fail. So I pretty much cut out most of the losses because I'm break even. And wow, this is actually textbook setup for my. I call this the way what I call this. I call this a pre-inversion entry. Okay, that's what I call it. It's something I developed like 3-4 months ago, where I had the thesis on why don't we do lower time frame power of 3 when we are trying to get into get a pre-firing inversion. Basically, what it is I'm just trying to figure out which fair value gaps are going to fail before they fail, so I can go break even. Okay. Instead of entering here like this, stops above the high. So basically you would enter like this, right? Off the inversion, off a normal inversion entry model, right? You would enter like this. You would enter like this, and then you would have a 52 point stop loss, right? And you would have gone break even. You would have got break even on the trade. Okay, and that pissed me off when I was getting into the whole trading, is that this model works, right? The inversion model that Dodgy teaches, PB teaches, and a bunch of other mentors teach, is it works, but I don't need a 52-point stop loss here to understand when my trade is going to fail. Okay, at least that's my opinion. What I notice is that if we open this candle right before the inversion and we come up, right? We come up. If we just market order in, put our stops above this, just in case it like wicks high for no reason, and then we see some distribution lower, we can be break even right away, and we can hold until either the internal swing or the further swing. And that makes your risk to reward ratio a lot higher, but you're kind of trading the same model. Like you're lowering your win rate, right? Let's say this was the full TP down here. Okay, let's just say, okay, my TP was 1 to 2. Let's say you are trading like this, and your win rate is taking a hit, but you are not getting break even as much, and you are also kind of like saving your low-key, you're saving your mental capital, because how many times have you been break even but the trade actually works? And that's something that like pisses me off. And so I ended up making this pre-inversion model that is very discretionary, that I use the 15 and 30-second chart to do. So that's pretty much over for my day. I guess I'll just sit here, pretty much secure the max payouts on the accounts, and that's it, boys. Like, it's that easy, bro. I just need 3 more winning days, and I get another 15,000 in payouts, and it'll put me at a $45,000 month. And yeah, let's just I'm just gonna sit here and let the whole day play out. I would say like until like 10 a.m. and see what happens, because I might be able to take options. So I'm gonna keep the recording running, and we'll see what happens.